What is up, everybody? I'm Scott Melker, and this is the Wolf of Wall Street's podcast. Today's guest is the CIO and co-founder of Valkyrie Investments. One of the most talked about subjects in the crypto space is the possibility of a Bitcoin ETF. As of now, an ETF has yet to be approved, but that hasn't stopped numerous organizations and firms from submitting their own proposals. In the race to be the first to get it done right, Valkyrie is a major contender. I can't wait to learn more about what an ETF would mean for the crypto market and overall institutional involvement. And there's nobody better to answer this question than Steven McClurg. Steven, thanks so much for coming on the show.
Hey, Scott, thanks for having me.
So once again, you're listening to the Wolf of Wall Street's podcast, where twice a week I talk to your favorite personalities from the worlds of Bitcoin, finance, trading, art, music, sports, and politics. This show is powered by Blockworks Group, a media company with over 20 podcasts in their network. You can check them out at blockworksgroup.io. And if you like the podcast, follow me on Twitter, then check out my website, join my newsletter. You can do both of those things at thewolfofwallstreets.io. This episode is sponsored by Voyager and Sovereign. Stay tuned for more information on both later in the episode. So as I touched on in the introduction, obviously, the ETF has become the holy grail of crypto. Why is an ETF so important at the most basic level?
Yeah, an ETF really, what it does is get more institutional involvement in the asset of Bitcoin. So there's a lot of restrictions on many institutions on what they can and can't own. Whether it's a pension fund, a insurance company, or even hedge funds that service many institutional clients. Most of them have to have a qualified custodian that's holding its assets and a structure that they're both familiar with and can invest in from a regulatory perspective.
So basically, it's a gateway to big money.
That's exactly right. Gateway to big money. That's the way to put it.
All right, so we all know why it's important. Why haven't we seen one yet? Obviously, we've seen ETFs for everything except for crypto, right?
Yeah, exactly. Well, maybe what I'll do, if you don't mind, Scott, is kind of rewind back in time, and this is more of my timeline and when I was building and launching and managing ETFs in my previous life in financial services. I was involved in a firm that did very esoteric type of money management. I was managing, emerging markets, structured credits, different types of securities that not the average investor was dealing with. Not too different than Bitcoin now and over the last few years. But let's take aircraft bonds, for instance, aircraft receivables. That's something that a lot of people actually haven't heard of. When you look at Delta Airlines, you think, oh, okay, I'm going to buy a Delta Airlines bond, and if something goes wrong, then there's all these airplanes and engines and shops and materials out there that I get access to. Well, it's actually not true, and a lot of people don't understand that. What companies like Delta and American Airlines and United do is they take their aircraft and they put it into a bankrupt remote vehicle and then issue bonds against that's completely backed by the aircraft itself, removing it from the inventory of Delta, and then they lease it back to, say, Delta Airlines. And those bonds are called aircraft receivables or asset-backed securities. They're actually very highly rated. They're very good, but I want to say about 8 years ago, I was involved in trying to put those particular asset-backed securities into an ETF structure. And you think, oh, okay, these are high quality assets. It's easy to do. Well, it took 5 years for the SEC to tell us that we could do it, but we had to limit our exposure to up to 15%. And granted, these are AAA or in some cases single A bonds that we only had a limited access to. So given that kind of background and history, when people started first buying Bitcoin ETFs, I thought, it'll never happen. I mean, just dealing with trying to get AAAs and other investment grade bonds into an ETF was nearly impossible. But things have changed. It took 5 years. We finally got it done. There's a lot of other type of esoteric structures that have gone in there. If you asked me 2 years ago, I would have said the SEC would never approve a Bitcoin ETF. I think things have changed a lot in the last year.
What are those things that have changed?
Well, number one is custody. The SEC was extremely concerned about security and potential fraud at exchanges and at custodians for Bitcoin. And with good reason. In 2017, we saw a big run up in this asset class, but then we also saw money disappearing almost every week. There was news of some exchange in Canada or Korea or China or somewhere else, or even in the US, where people have their money in it, and then all of a sudden, oh, it's gone. We forgot our keys, or the founder died and he had all the keys, and maybe he's still alive, but it's back and gone somewhere else. So there was a lot of concerns there. Fortunately, a few really big players have stepped up their game and have gotten into this asset class. And really in the last year, I would call it a renaissance of these crypto exchanges becoming very similar to what we're used to in the institutional side of third parties holding things like bonds and equities. Coinbase is a really good example. They've become very institutionalized and have really focused on their institutional business. Anchorage has done a great job of first class security. Gemini has done a great job. Fidelity has gotten into the space, and it's a name that people are familiar with. So yeah, the institutionalization of a custody has gotten regulators a lot more comfortable.
So it's largely about security. They just basically can't back something unless they know that the funds can't be stolen and that investors are safe. At the end of the day, it's their job to protect us from ourselves and bad actors, right? So, but it's interesting. You said it was so difficult in the past, even in your experience with, less nascent assets and things that obviously had already been rated and were more understood. So we have the custody now. You've gone full circle, right? I mean, you're now trying to do it yourself. So what changed for you besides just obviously the custody?
Yeah, I mean, custody and security was really a big factor. It's one of three things that I was really looking for. The second one is really the liquidity. Even though we had quite a run up in 2017, Bitcoin hit 20,000 back then, or in January of 2018, and then came down quite a bit. The liquidity still wasn't quite there. A lot of it was traded OTC, which is what I'm familiar with, trading bonds in my past life. But there wasn't a whole lot of supply for the amount of demand that we would need to see for real creation redemptions in an ETF-like structure. With a lot more players stepping in and a lot more exchanges coming about, oddly, that's actually a really good thing. The more exchanges that are high quality, the liquidity has increased significantly, as well as great institutional players stepping in and making OTC trades, whether it's Susquehanna or Jump or DRW or consolidated trading. These are all high quality traders in various asset classes that are trading Bitcoin. So it's really created a lot more liquidity. And then of course the growth of market cap just in the last 6 months, or really in the last 2 months, but we finally got to a market cap to where there's enough market cap for liquidity. In an ETF, for instance, you don't see a whole lot of ETFs that hold micro cap equities because of the liquidity constraints. And as a matter of fact, the SEC has a restriction on the amount of illiquid securities that can be in an ETF. It's a restriction at 15%. And I would actually argue that Bitcoin would have fallen under that level 2 liquidity type structure as well, even a year ago. I feel like Bitcoin may have surpassed that and is really now a much more of a liquid asset.
Yeah, that makes a lot of sense. So it begs the question, because even in 2017, we were already hearing about rejections of ETF applications. Was it just a pipe dream for people that were trying to do it then? Because it seems like they were way too early, and anyone with a background in structuring these products would have understood that.
Yeah, I think so. A few people were just early, and by the way, it's good to be early.
Sure.
It's helped people like us. It's going to help others that are trying to do this as well, to at least start the conversation. So I certainly applaud the people that tried. Gemini is a good example. SolidX, Van Eck has really been a trailblazer in trying to get this done. And Van Eck, by the way, Jan has a lot of experience in commodities, right? Is really an expert when it comes to gold and putting structures like gold into an ETF. So these guys have been trailblazers. But no, I think now is really the time. I don't think that we're going to get one approved tomorrow, but I definitely feel like it's under 3 years, if not better than that.
I'd like to think 2021, but maybe I'm a bit overly ambitious.
I'm a former bond trader. I'm always very negative on everything.
Just set the bar low and always be pleased rather than disappointed, I guess.
Exactly.
So that begs the question. We've seen other products emerge in the absence of an ETF, obviously. None more notable than GBTC, the Grayscale Trust. Can you talk about why those trusts are attractive in the absence of an ETF?
Yeah. Well, really, what's great about those trusts until an ETF arrives on the scene is that it's at least closer to a structure that a lot of institutional players are used to. It feels a lot more like a closed-end fund structure, and I'll talk a little bit about closed-end funds. There's two different types. Most people in private equity or venture, when they hear closed-end fund, they think of a closed-end private fund. I'm talking about a closed-end mutual fund. So a mutual fund that's closed-ended, that you can actually list on New York Stock Exchange,
Right.
NASDAQ, OTC. And a trust feels a lot more like a closed-end fund, which is actually a structure that a lot of pensions invest in. Pensions are very familiar with the structure. They can get behind it. They, you hold all your assets in a third-party custody, just like you do in any kind of mutual fund. It trades OTC. And by the way, one of the reasons why it doesn't trade on a national exchange is because one of the restrictions is the liquidity restriction from the SEC, which is why it can't. And SEC, regulates national exchanges, or FINRA regulates OTC. So that's why they trade OTC. But it is very familiar. You have the trust structure that you invest in, so that you can hold the sponsor of the trust liable if anything happens. And then you can also hold the third party custody liable in case anything happens, right? That could be, losing keys or transferring money to the wrong account, or any of those things, right? And a couple of these guys, like Coinbase and Gemini, they have insurance on their custody holdings on the institutional side. So if there was a problem, they do have a backing in insurance. So you have to be careful there, though.
Yeah, that makes sense. So obviously, it's just a familiar way for a lot of people to purchase something, right? And even you're talking about on the institutional side, for your average retail person who says, maybe I want some exposure to Bitcoin, I want to put it in my IRA, something like that. They see GBTC ticker. They don't need to even understand what a trust is or what it is. They think they're kind of buying Bitcoin and putting it in their IRA and moving on with their life, right?
Yeah, that's exactly right. And by the way, I've done it too. I mean, a third of my IRA is in GBTC, still is today.
Which is interesting because both of us know how to buy Bitcoin. We know how to secure Bitcoin, and we know that we're paying a premium to hold GBTC. So the idea of the trust is one thing, but the actual structure of that product or any other product is very different. And there's been a lot of criticism of GBTC, of course, by people who understand that you are paying this huge premium for the right to buy it and hold it in a manner that you're familiar with. So can you talk about that premium, why it trades so high over NAV, and what's going on there?
Yeah. And maybe what I'll do is back up to, again,
I love it when you back up.
Relate it back to what I'm familiar with and what a lot of investors are familiar with, and that's the closed-end fund structure. So when you have a closed-ended mutual fund, and I've managed a few of these in the past, you typically trade at either a premium or a discount because it is closed-ended. And what that means is you can sometimes create new units. And in the case of GBTC, you can always create new units as long as the window's open, but you can't always redeem. So if you have an asset class that's sitting in a trust that's actually has more demand than supply, or a yield in terms of bond that's really hard to get anymore, then it'll trade at a premium. If it's something that is the opposite, a yield that's really low, or something that's a little bit less desirable, or something that has ample supply, it often trades at a discount. And maybe I'll give a good example of this. There was a closed-end fund that that I was involved in 10 years ago, and during 2009, 2010, we bought up a ton of asset-backed securities and other high-yielding assets that were yielding very high at the time at very low discounted prices. And then when the markets turned around after the Great Recession, we were getting yields that were well above what the market yields were because interest rates have dropped. So the fund itself was trading at 9 to sometimes 12% premiums, just because it had a very highly desirable asset, high quality, high yielding. Typically, closed-end funds that hold straight equities, or even lower yielding bonds like munis, we'll trade it anywhere between a 3 to call it 10% discount. In the case of the Grayscale Trust, Bitcoin, in my opinion, it feels a little bit more like a bond, but a hard to get bond. It's something that the average person just can't. You can't just go and buy a bond. You have to buy an ETF that holds bonds, but you're not going to call up Morgan Stanley, someone on their bond desk, and say, "Hey, I've got $100 to spend. Will you sell me a bond?" Right? It's not going to happen. So Bitcoin's kind of the same thing. You're not going to call up one of the OTC desks and say, "Hey, I want to trade $1,000, $10,000." You're going to have to log into a Coinbase or Gemini account and trade it yourself, and where it's slightly thinner markets than OTC. So there's a lot more demand for the supply, and if you want to buy it in your IRA, it's your only option, right? And so it's always going to trade at a premium because people are constantly wanting it in their IRA because it really is the only thing available.
But you give an example of like this excessive 9 to 12% premium that you've seen in the past, but we've seen their products go hundreds of percent premium.
Yeah, that's right. That's right.
Why does that happen?
I don't know where it is today. I mean, it's surely
right, but certainly with the Litecoin product and now they're dissolving, I guess, the Ripple product, the Ethereum product. We've seen some pretty insane premiums. So, I mean, how does that happen? And it's funny because you think of this as the safe and regulated instrument.
Yeah, that's right. That's right.
Right.
Well, and it does go with market cap too. If you notice, the premium goes up as the market cap goes down. So that just explains this, supply demand dynamic, right? Bitcoin is going to be a lot less of a premium than say Litecoin, or Ethereum is going to be somewhere in the middle. But it's all supply and demand. And I mean, I've never seen a closed-end mutual fund product, no matter how good it is, trade at the kind of premiums that the Grayscale products trade at. It's really unbelievable.
But is that because they're the only one and they can do it? I mean, I know that you're going to compete, and I know that others are as well. I mean, I guess we could talk specifically more about what Valkyrie is looking to do, obviously, because I know it's a blend of both ETF and trust products. How can that premium be somewhat fixed? I know that obviously you can't always have it trading at zero, but how can you at least make it manageable, especially when you're seeing 100% premiums?
Yeah, I mean, really the way to offer, well, discounts are very easily solvable by giving redemptions, right? So if you're ever trading at a discount, you've got an arbitrage play. anytime you offer redemptions. The best way actually to solve for high premiums is to do more creations or sell more units. And as you can see, at certain times, Grayscale has shut off its creation for the time and let that premium get back up again, and then it sells back into it. So really, I think the best way to manage it is just to offer constant availability of the underlying. But that is, at times that's going to be kind of restricted by the supply. I don't know if you saw the Morgan Stanley. Was it the Morgan Stanley report that came out this morning that said, they basically said that Bitcoin is at the peak of the supply demand curve, meaning it's one of the most overbought assets at the moment. Well,
sure,
it is.
Yeah.
Why?
Actually, I read today that long Bitcoin is the most crowded trade on Wall Street now, even more so than long tech, which is absurd when you think about the FANG stocks run that we've seen this year. Basically, I mean, Facebook, Apple, Google carrying the entire market, up. There's recession, and it's even a more crowded trade now on Bitcoin, which means there really just is a lack of supply at this point, clearly. And to speak to Grayscale, it also just came out that this month they have bought 1.9 times, I believe, what's being mined. So we know that everybody who can get their hands on supplies is trying to do that. I think that happened in a day, actually.
Exactly.
But it's interesting. They're doing this, but the ETF, if we believe that's going to be approved, in my mind, would effectively end their trust, right? I mean, like, an ETF is the trust destroyer.
It is. That's exactly right. And the reason why is because the way the ETFs work, you have to work through a third party authorized participant, a third party designated market maker. And what these third parties do is they're constantly trading and finding arbitrage. And the arbitrage that they're finding is by either redeeming or creating baskets and creating shares or redeeming shares, depending on what the supply demand curve is. And that essentially keeps ETFs very, very close to NAV without trading at too much of a premium or discount on either side. The only way that doesn't work is when you have underlying assets that are extremely illiquid, which, by the way, that's why the SEC limits it to
which
15%.
They won't allow, right? Which they're not going to allow anyways. But so what happens to, your basic person who's holding GBTC and, an ETF is created and they have this entire, exploding, ballooning business? What does that look like?
It means that the premium is going to collapse.
Right.
Plain and simple. It may not collapse all the way to zero, but it'll stay under 10. And by the way, anybody that has come in at a very high premium, the ETH product. Let's talk about that for a moment. The ETH product was trading at 100% premium and higher. So if you had bought that, and then there was an ETF that came along, you'd lose half your money. Just getting back to the correct price. Yeah. And by the way, you could do that anyway. I mean, at any time, a premium like that could collapse, and it did, right? I mean, it collapsed from like 120 to 80 overnight on one day.
Discover BPro, a token created by Money on Chain that allows you to earn a rent on Bitcoin positions and gain free leverage. With MOC liquidity mining, BPro holders also get MOCs every day. So yes, with a Bitcoin on steroids like BPro, DeFi is definitely for Bitcoiners. Learn more about BPro at www.moneyonchain.com/wolf. Sick of paying ridiculous fees to trade crypto? It's time you try Voyager. It's hands down my favorite place to buy and trade crypto and is 100% commission free. Voyager gives you easy access to more than 50 top crypto assets, and you can instantly transfer cash from your bank account so you never miss a trading opportunity. Even better, you can now automatically earn interest on your crypto holdings. Currently, they're offering up to 6.5 APR on Bitcoin and up to 9.5% on USDC. Yes, you heard that correctly, up to 9.5%. And there are no limits or lockups, which means your funds always stay liquid. Find out why so many people are making the switch to Voyager. Visit investvoyager.com or search for Voyager on the Apple App Store or Google Play Store and get $25 in free Bitcoin when you use the promo code SCOTT25. That's SCOTT25. The existence of that premium and that arbitrage opportunity has been one of the biggest trades in crypto, right? I mean, there's an incentive to maintain that crazy premium because your accredited investors come in, they wait their lockup time, and then they sell on the open market for a huge premium. I mean, someone was telling me that recently they're an accredited investor and they were doing the Litecoin, participating in the Litecoin Trust. And basically, I believe it was a 6-month lockup, but as long as Litecoin didn't go down 90% in 6 months, they were guaranteed not to lose their money just because of the structure of it and the premium. So who wouldn't take that trade?
No, nobody would. I mean, and let's take a look at the ETF for a minute, right? When I said a Bitcoin ETF might be very soon, right? In under 3 years, probably 1.5. It's going to be a long time before you're going to see a Litecoin in an Ethereum ETF. There's a lot more wood to chop to get there. So it's still a good trade.
Yeah, it's just a matter. I mean, at that point, the market cap is so far from being sizable enough, sort of, as you said. And I think there's a lot of other products that we're seeing being talked about. I know that they're talking about a basket index for the S&P of like top 10 or top 50 currencies. Where do you think those sort of fall in the institutional interest and as far as people having something that they're more familiar or comfortable trading?
I actually think that products like that are for people that have no idea what they're buying.
I agree because why would I want XRP in my index right now?
Yeah.
Why would I buy that? Right. And then once you get past like the first 5 or 6, it becomes really the Wild West in crypto.
Yeah. That's exactly right. I wouldn't recommend any of the existing index products to anybody. One of my biggest issues with all of the index products that are more prominent that are out there is that it holds something like, it'll hold Bitcoin, it'll hold Ethereum, it'll hold XRP, Litecoin. And when you start looking at what all of those are, I mean, really, we just described in 4 tickers, we just described really 3 different types of crypto assets that have nothing to do with each other, in my opinion. Bitcoin is a cryptocurrency. Litecoin, that's a cryptocurrency, as is Dash or Zcash. They're meant for global peer-to-peer transactions, right? Ethereum and other layer 1 protocols are really meant for self-contained dApps, and they're used in very different ways. They're actually more similar to data charges on a network than anything else. And then you have XRP. I mean, who even knows what that is? I just call it Ripple. Which upsets a lot of people, but
I think it's a security. I think we're going to find that out. But yeah,
it's a security. That's
what it does. I don't know, but I think we're going to find out that it's a security.
Hesitant to say anything until we find out exactly what it is.
Sure.
But I've never owned it. I've never touched it.
Which makes sense. So you guys sort of have a novel approach, which is to focus on both ETFs and trusts, knowing that if you just did a trust, the ETF could ruin your business, and if you just do an ETF and it doesn't get approved, you don't have anything, right?
That's exactly right. So yeah,
it's so brilliant. Is anyone else doing that? I just haven't seen that elsewhere. Seems like people are all in one direction.
Yeah, I haven't really seen that either. So I'm not aware of anybody else doing that. And I guess we're just a little bit more pragmatic. But by the way, I also like diversifying the types of wrappers, right? So in my past, I've done the exact same strategies in an ETF, in a closed-end fund, in a mutual fund, in a UCITS, in a private hedge fund, and there's all these great wrappers that you can put it in that different types of people can and can't buy. It's like, okay, you create a strategy that's scalable and you throw it in 7 different wrappers. Who cares about the wrapper? Let's focus on the strategy itself. So I think that's really our approach is, just putting it in various wrappers, and we have a singular approach in managing it, as opposed to most people that specialize in a wrapper and know that wrapper really well, and that's where they're going to focus and do several different strategies in that.
So then I have to assume that the name of the game is just raising funds, right? Because obviously we're seeing each week that goes by, you see another person announcing some sort of fund or some sort of ETF. So it becomes, in my mind, sort of a race to who can create a decent product, but then raise the most money. I mean, is that accurate?
Yeah, that's exactly right. And look, previously in the crypto space, whether you have a hedge fund or any other type of fund, singular asset fund, what most people have done is pursue individuals and family offices, and that's a great strategy when you're getting an asset class off the ground. But really, what we're focused on is the true institutional space. Not family offices, not individuals. Even though we're taking them, obviously, but we're really focused on setting up something that is usable for insurance, pensions, trust, endowments, and even large wirehouses to go on their platform. That really is the goal for us.
Yeah, it's funny because we hear about institutional adoption in crypto, certainly have been for like 3 years. It was always like, oh, the institutions are here, 2016. The institutions are here. But it's sort of what you're talking about. Crypto-focused hedge funds, family offices, those count as institutions, but they're really not the institutional adoption that people are talking about. It's interesting you talked about, the ETF becoming possible because the market cap has reached a certain point and there's more liquidity. How big does the market cap have to become to see the Apples and the Googles and the Facebooks start talking about Bitcoin as a treasury asset and not just the MicroStrategies and Squares?
That's a really good question. And by the way, we keep a portion of our treasury in Bitcoin as well, FYI. We think it's very important, and we believe in the asset class, and we believe in the the degradation of the dollar and other currencies. I think a lot of the other companies are really going to catch on, especially global companies. I think MicroStrategy was a bit of an anomaly. They kind of saw the light and were like, oh, okay, this is really interesting, and the trade worked for them. I actually think that Tesla is going to be one of the next ones to accept Bitcoin for cars and to start holding it on the balance sheet. By the way, I'll say this publicly right now. If Tesla decides to allow you to buy a Tesla with Bitcoin, I will buy a new Tesla. Just, I'll put that out there. And I think a lot of other people would too.
I bought one last week and they did not accept Bitcoin. Actually, I'm waiting. It hasn't arrived yet, but it was actually a point of conversation. It's hard though, because then you have the taxable transaction of selling your Bitcoin to buy it. So it becomes a lot more aggressive than it sounds. But if we lived in a reasonable place in a vacuum where you didn't have to pay taxes on the Bitcoin for buying a car, I would have done the same.
Yeah. And by the way, there's a lot of other companies that are taking Bitcoin right now. Open up your Backed app or your Gemini app, and there's like 10 places where you can buy Bitcoin. And by the way, when Bitcoin is trading sideways, that's typically when people start thinking about that, right? They're like, okay,
right. If it's going straight up, they don't want to buy something with it. It's like, I'm going to pay twice as much for that car in 1 month.
Yeah, that's exactly right.
That is the feeling there. But so it was interesting because MicroStrategy, there's such an anomaly, like you said. As amazing as it is, we're talking about someone who spent hundreds of millions of dollars with a market cap of the whole company of a few billion. I think then you see Square, which I'm not sure right now, but that's like a 90 or 100 billion market cap company. And they bought 50 million worth for their treasury, right? So they bought a tenth as much and their company's 20 times as big, or, roughly. I think that's more in line of what we'll likely see from companies that want to start gaining exposure as a treasury asset.
Yeah, I agree with that. I don't think there's going to be many people out there like MicroStrategy. They're good, but
I love it.
Really shocked me. Really shocked me. Well, I don't know. There might be other cases, and if you look at it, when the market is like it is, where all asset prices are going straight up, right? Any kind of equities, and tech companies are earning money hand over fist. You have to do something with that cash. And you either invest it in further operations, or you invest it in bonds over here that yield you nothing, or you invest it in something, but nobody wants to just sit on cash. So I think as certain tech companies are, bringing in dollars, their stock prices are going straight up. They really don't want to buy back their own stock. Oddly, Bitcoin makes a lot of sense.
It does. MicroStrategy has made that case. I mean, Michael Saylor's made that case.
Yeah. I mean, that's exactly what you should be doing. And by the way, issuing convertible notes that yield nothing, that means you have to pay nothing in order to leverage that position. I mean, it's the most brilliant thing you could do right now.
Yeah, and that's why he asked for 450 and got 650.
Right. Because insurance companies and people like that are trying to put money to work in bonds. And a convertible note is a bond-like instrument that yields you something that they need. Like there's a star for yield, anything that yields something. The institutional markets are picking up. Even if they know that they're going to turn around and put it in Bitcoin, they're going to buy it.
I mean, it's interesting. You've seen people calling basically MicroStrategy stock a proxy ETF because they are so exposed. I mean, I don't know that today it stock's up 3 times since they did it or something. It's incredible. But and he's been very quick to say, no, that we're a software company. we're not a Bitcoin ETF, as much as I love this. But I mean that, we're talking about all the ways that people might want to gain exposure because they're afraid of the underlying asset, or an ETF doesn't exist, or the proper, and that's been one way that people have arguably been gaining exposure to Bitcoins, by buying MicroStrategy stock.
Yeah. Absolutely. But yeah, I don't know if I was to speculate, I don't think Apple would. Yeah, I could imagine, maybe I could imagine Intuit being the next one for Tesla, but who knows? Who knows who's going to pop up next? Frankly, God. I never heard of MicroStrategy before they bought Bitcoin.
Yeah, nobody did. Right.
I don't even know what they do.
Yeah. business software, not nearly as exciting as buying a ton of Bitcoin. Yeah. So, and actually now obviously your background, we didn't even talk about it, but you were at Guggenheim for years, right? And today I saw some news, maybe it was yesterday, that Guggenheim has already been buying Bitcoin for clients. So
yeah, I mean, that wasn't happening when I was there, but yeah, it certainly has been happening in at least the last few months, if not longer.
So that begs the question that all these people that are sort of talking about it, do you think they're talking their book like they already own it? And obviously, so now they're willing to come out of come out from the shadows and talk about this thing as if they're going to buy it, but really they're already there.
Look, I got to tell you, I owned Bitcoin for a lot longer than I talked about it. And I guess just, there was a certain period of time where you just didn't talk about it, right? It was sort of like Fight Club. You bought it, you didn't know anybody else owned it, and you were kind of scared to admit it. But that was certainly the case for a long period of time. And I'm sure there's a lot of people at Guggenheim and other places that are portfolio managers that have owned it as well. Not a lot, I would say some people.
Yeah.
Frankly, a lot of the people that I worked with on the desk, when anytime Bitcoin came up on CNBC, or back in 2013 or 2014, or even as late as 2016, they all made fun of it, right? They're like, oh yeah, that's not going to go anywhere. And then you can tell maybe out of the 10 people on the desk, 2 were really quiet, and they're like, okay, maybe me and that other guy own it, but we're definitely not going to say anything.
It's hilarious. So actually, Mark Cuban recently, totally separate topic, tweeted something which was hilarious because he called it the cryptos, right? He said the cryptos are trading just like the .com bubble, something to that effect. We have sort of the Amazon, Google as the Bitcoin and Ethereum's, and everything else will disappear. I mean, do you think that we are in a bubble here, and that people should be focused on the safest and obviously the most proven assets here, or do you not think this is a bubble? What's your opinion on that?
The great thing about bubbles is they can actually last for a really long time. They can get bigger and bigger. And so I would actually agree that a lot of crypto assets are in a bubble. And there's something that I like to call the greed trade, where Bitcoin has run up, and then people are like, okay, well, Bitcoin just quadrupled. Where can I get the next Bitcoin? And they're pulling up their Coinbase app and like, okay, Bitcoin was up, X percent in the last year, but this other one, Ripple, was only up, 40%. So I'm gonna trade out of my Bitcoin and buy Ripple, or I'm gonna trade out of Bitcoin and buy Ethereum, or just name the asset, and you just kind of go down the list. And that's really the psychology of a lot of people that that really haven't focused and understood what it is. And they're just looking at the list and looking at 1 year results and saying, okay, I'm going to trade out of the one that's done the most and trade into the one that's done the least. And it's really interesting market psychology when that happens. But it's the greed trade. You make a little bit here, and then you get greedy and you sell it, and you try to make a little bit here, and then you get greedy and sell it and try to make a little bit here again. And look, a lot of these assets can and will keep running despite them being
even if they don't have a product.
or people not even understanding what it is. And so I hate to say, yeah, you should sell it right now, because frankly, like, that's probably an opportunity to make a lot of money. But I'm a little bit more risk adverse than that, and I'm only going to buy something I understand, that I think that 3 to 5 years from now is actually going to have some kind of benefit, right? So I'm looking at it from a fundamental perspective, saying, okay, which one of these are actual usable assets? If it's a layer one, I try to think about, okay, which layer ones are going to be readily adoptable, and by the way, different industries will adopt it in different ways, right? Ethereum is actually a great layer one that a lot of people are building on. There might be better ones. It might be outdated technology versus some newer ones, but when you already have adoption and use, it's hard to get rid of it. So it takes something that is marketed really, really well, that's good enough to surpass the technology that people want to pay for and buy and build on. So look, I think despite the fact that there might be better layer ones out there, they may not surpass Ethereum. By the way, Ethereum very well could be kind of fall into the cryptocurrency bucket.
Right.
I personally don't think it will, but I'm not going to rule it out. I definitely think it's probable. But then there's some other really good protocols out there, like Algorand is a really good example. Algorand is probably the most superior blockchain to put securities on, right? And I think that they're really pushing to be adopted by Wall Street. So there's going to be some really interesting things come out in Algorand, just because it's just it's a very simple process just to use their blockchain directly. Nim and Cardano are also working on things that are a little bit similar and working on adoption. And marketing is important too, right? So you might be slightly worse, but you could, if you spend the right
much better marketing.
That's why Ripple was so big, right?
Yeah,
they spent a lot of money on marketing.
You're on CNBC with them telling you how to buy shares of the Ripples. You know that you're definitely have gotten out there. That's interesting, though. You talk about the Algorands and these other layer one protocols. Do you think that eventually we see basically all securities tokenized?
I do. I mean, look, in a lot of ways, a lot of securities are already electronic, right?
Sure.
And but I am seeing a really interesting trend where once they become tokenized, so to speak, it allows you to bypass intermediaries, which I think is really, really important. Just dealing with the whole mutual fund and ETF industry myself in the past, and all the layers of people that you had to go through and pay, and by the time you pay everybody, it eats into your returns, it eats into what you make as a money manager. If you can start bypassing a lot of that, I think it gets really interesting really fast.
Right.
So, but yeah, circling back around to Mark Cuban's comment, I mean, we went on a long rabbit trail there. I think in a lot of ways he's right. People are just buying things to buy them. They're buying Well, look, stamps.com. Okay, really, how big is stamps.com ever going to be, right? But it's shooting up in value because people think it's something. It's in the same category as any other thing that has the .com after it. And then when the market comes back down to earth and stamps.com crashes again, but it's still a business, right? It still exists. It doesn't mean that the business is any less viable. It's just the asset price has come down from where it was before. There's a lot of companies like that, the .com bubble, and then there were a few really big ones that came out of it and have dominated, right? I mean, look at Amazon,
Right, of course.
So I mean, I think Bitcoin's going to be a lot more like Amazon. And by the way, 2017, I think, was the bubble that burst for that stage. Things like Bitcoin. I don't think. I mean, look, we're overbought, but it's because people want it right now.
Yeah,
I don't
it's
think
simple supply and demand. It's overbought. This isn't like, people are not buying to speculate; they're buying to hold it.
Right.
And that's a very different situation.
Bitcoin was Beanie Babies, right? It's like, oh, I got to get some. Yeah, it's really cool.
Get those tulips.
Right. Now it's like, I better buy Bitcoin because my dollar is going to be worth nothing one day. I'm going to be, rolling around in wheelbarrows full of dollars just to buy a loaf of bread. So hopefully that never happens. But
gosh, I hope not.
Good.
That is like the Bitcoin maximalist wet dream, but I don't necessarily see that future here. But we see it all around the world. I just don't see it necessarily with the dollar. But the reason that everything is going up is because the dollar is going down. Make no illusions that when the dollar is devaluing, that's why stocks are going up, and that's why gold and silver, even Bitcoin to some degree, are going up. I'm curious though. So we didn't really talk about like your very long and distinguished history, but well, you would have to be doing it since you were 10 if we were in diapers when the mini disc came out. But I know you've been doing this for a good, couple decades, these kind of products. When did you actually find out about Bitcoin, and what made you, give up sort of all of these other, things that you were passionate about, all these other businesses to focus specifically on this?
Yeah, so I actually discovered Bitcoin in 2009. I discovered that it existed, and it was way later that I bought it. So don't think that well, you couldn't even buy it in 2009 or 2010 if you wanted to. You had to have mined it, but I remember back then. And by the way, in 2009, 2010, I was a sovereign credit analyst. So what I was doing was analyzing various, the credit quality of various countries,
right,
their currency, and a lot of other things that go along with it, emerging market debt. That's what I was doing then. So I came across it as a potential currency, and began analyzing it. And my first thought was, this is kind of cool. Sounds like a really fun kind of money to be used by developers, no different than playing World of Warcraft and mining gold, or other types of I was like, that's really cool, but like this will never be used as money. The Fed will never allow it. And that was my thought back then. But I still followed it because it was super cool. But yeah, I kind of started getting passionate about it a little bit later, and actually left the traditional finance world behind in 2016 to, I joined an early stage fintech company just so that I could kind of go, dive into Bitcoin and blockchain in general. It wasn't really until, almost a year and a half later that I decided that, I don't want to be part of a fintech company. My roots are asset management. I should really build an asset management company that focuses in on blockchain.
So, as you said, sort of as we're recording, Bitcoin's at 36,000. Obviously, as you started thinking about this business, Bitcoin was probably like 6 to 10,000. How big do you think that this can be?
Look, I think by the end of this year, we'll probably triple in value. I really do. And I really base that number on, when I say triple, I think within a year, 18 months, we could see 500,000. And this isn't just some number I'm just throwing out there because I'm like, oh, I want to put a number out there.
Throw them out there. Go bigger.
Crazy.
Come on.
But it's really because I'm seeing what the demand side looks like. And if you do the math on how much supply there is to actually sell and the availability of putting this asset class on the balance sheets of institutional investors that are highly interested right now, and the asset managers that I know that will be coming into it even bigger, that's really where the price has to be just to absorb the demand. So yeah, a 10x in 18 months isn't, out
just
of
did
question.
it. We just did it from March. I mean, it was $3,800. We're 38,000 right now. So as much as the numbers seem astounding, it's kind of par for the course for this asset.
Yeah. No, that's exactly right. Well, and it's funny, I'll bring it back around to our early conversation about Tesla. Man, I don't remember what year it was, but I also covered energy and focused there. And when oil prices were going up towards 100, I was basically trading Tesla and my own PA as like a hedge against oil, because actually oil is very hard to trade. I don't know if anybody.
It's impossible. I've been down that unfortunate road myself before.
Yeah. And Tesla is an interesting proxy to, the oil trade. So I used to trade it, and I got caught long Tesla from like $30 to 100. Okay. In a very, very short period of time. So I actually sold my Tesla shares and just got out of that trade entirely at that period of time and went and bought a Tesla. Right. So with my proceeds, it was great. I would have never imagined Tesla 10xing again. Right. I was like, okay, well, it might double from here, but that's it. That's all it's doing. No, I mean, I did the same.
I have the same story.
It just goes to show you that and Tesla is very underutilized as a car and a car company. I mean, I've had mine for over 8 years and it still runs great, right? I have no desire to get a new car because it's such a good car. Bitcoin's adoption is so much bigger than what Tesla's adoption was over that same period. So
it's absolutely true.
Yeah.
I did the same thing.
Imagine it.
I can imagine it. I did the same. I can imagine it because I saw it. I did the same thing. I was buying Tesla in the $30 range, not enough to buy a car, unfortunately. I sold it like 300 and something. I bought it again at 180, but then when it went absolutely nuts, I sold it between like 500 and 750, kept a little, sold the rest of 1,000. It went over 2,000 and split. Now it's higher after the split than where I sold it. So
it's insane.
Just happy with my gain. Nobody ever went broke taking profit, but they didn't buy a fleet of Teslas with their profit either. So, as they say. So, I'm curious then, where are you guys at in the process? Obviously, I know that you think an ETF could be 3 years out, and it's my understanding that you basically have 3 years, right, to get approved.
Yeah, there is a time period to where if it hasn't been approved by then, you do have to withdraw, and then we saw that happen with several other ETF applications that had gone out there. It didn't get approved, had to withdraw, and so look, I think we'll be well within that. I think we'll be well within that frame. So we'll see what happens. Hoping for the best. But I do think it's a really, really strong possibility, and I really think it's going to be pretty important for a lot of the adoption that we want in Bitcoin on the speculative end, right? What I really want to see Bitcoin become is a true currency, a true borderless currency between people that disrupt intermediaries. And we really can't. We're really not there yet. It's going to be a long time before we get there. We got to see that speculative phase play out, because nobody's actively buying a lot of things with the currency if it's 10xing, right?
Right.
It's got to slow down. It's got to level out, and it's got to be well held. And then once that happens, we'll probably see a lot more transactions happen. But
I
that's
agree.
what I want to see.
Right. So if you believe that a ETF is a year, 3 years out, you guys have started a business, you have the trust. What's the advantage of someone investing in a trust as opposed to, going at it on their own at this point? Because obviously you have a business still that's not dependent necessarily on an ETF being approved in the immediate future.
Yeah. Well, let me put it to you this way. We have a client that is whose whole career is based in cybersecurity, who has transferred his Bitcoin to us because he doesn't want to deal with the security, right? I mean, anything could happen, right? You can lose your ledger. It can be corrupted. It can be hacked, as we recently found out. There's a lot of things that happen with just keeping your money in an exchange, but keeping your money in a product that is it is a security. It's a Reg D security that's regulated, puts the manager on the hook, which is us, and it's held in a third-party custody whose assets are bifurcated from the rest of the company's assets. So if something happens to that company, nothing happens to the custody over here. That has insurance on top of that. That's running their own security, and it's big enough to hold their security. It's like you don't have to sweat the security side of it anymore.
It's huge,
right?
Yeah.
I mean, yeah, that's exactly right. And and then you might make the argument. It's like, okay, well, I can just trade Bitcoin and move it over to a private wallet and move it back. And it's like, okay, well, you enter in one number or letter that's wrong and it's gone forever. Okay.
Yeah.
Or you forget your private keys. A lot of people have forgotten their private keys.
Yeah, we see there's 2 stories right now. One guy has like 2 password attempts left to get 230 million or 270 million or something. And another guy is trying to convince his town to like dig up their landfill to find his $70 million on a wallet.
Yeah.
It's not like these aren't theoreticals. I mean, these are real things that happen. And is there an advantage, with these trust structures, as we kind of talked about with GBTC, like buying through you? Is there a discount or, a way to sort of have that arb trade, but not to that same degree?
Yeah, I mean, look, that's something that you can never guarantee or speculate on, but like we discussed earlier, people that are buying through Grayscale and then selling it on the open market once their lockup period's over, they're selling it if it's Bitcoin at a small premium. I say small premium because
like 12%, it's small, yeah, small relative to 200% on Litecoin, yeah.
So look, that's definitely an advantage to some people, but it's definitely not something that you can ever promise, right? Or even state, but that is happening now.
So after this, where can people check you guys out and also follow you?
Yeah, so that's a good question. What is my Twitter?
I can look it up for you. I follow you,
What
is my Twitter name?
It's not anything.
I think it is too.
Yeah. Isn't that funny? I mean, wow, that was a long time ago that I created a Twitter account. 2009, maybe? I don't know. Wow.
Yeah, I mean, I was the same. I think you're Steven McClurg with 2 C's, right? Yeah, StevenMcClurg for those who are
that's
following along in the audience.
Yeah, and then our website is that's a really good question too. What is my website? Valkyrie. You put me on the spot.
Sorry, man. Gotta make sure people can follow you.
Yeah, no, exactly. You know what?
I think it's valkyriefunds.io.
Yeah, you're right. Valkyriefunds.io. You found
the people's champion. Being a high frequency trader, I have the super fast internet over here.
Well, you can see how much of a nerd I am. I'm so busy, digging into filing ETFs and stuff that
Who cares about a website?
We even have a website? Okay, great. I'm sure somebody's taking care of
that. That's why you have people for things that we don't do our best. Well, man, this is an awesome conversation. I think finally had a chance to really get some understanding to some degree for myself, but for other people, and the importance of the ETF, what that looks like, and how sort of all these other products play into that. So thank you for giving us that insight. I'm really looking forward to seeing what you guys come up with.
Yeah, no, I really appreciate it. Thanks for having me on, and had an amazing discussion. This was a lot of fun.
And I'm not even going to mention the fact that we're wearing matching t-shirts here to end the entire thing.
There's a V-neck though?
No, mine's not quite V-neck.
Oh,
okay, so they're slightly different here.
Hey.
I can go get my V-neck. Hey, great minds think alike, right? Especially in fashion. Thanks, Ben.
All right, have a good one.
Let's go.